I want to move on to markets and the jobs report here right now. You get stocks turning a little bit lower there. Not so much so, but losses accelerated just a little bit in the last couple of minutes. We're now down off about 8 points on the heels of a less than stellar September jobs report. The U.S. economy adding far fewer jobs than anybody had anticipated last month. The number of non-farm payrolls, the non-farm jobs, it rose by 156,000 in the month of September. And that's 19,000 shy of the original Wall Street estimate of 175,000. Well, I don't care if it's 175 or it's 156, it's not enough. We need, in order to grow this economy, between 300 and 400,000 jobs being added every month, and we are nowhere close. So will this disappointing employment number ease some fears of an interest rate hike before the end of the year? Our very own Ashley Webster standing by at the NYSE with the very latest. You know, Ashley, it's always a little bit counterintuitive here, because in some ways, these days, bad news on the economy is actually good news, because people are saying, oh, phew, Janet Yellen and company won't actually move by that quarter point.
Yeah, that's true, Trish, but the general consensus around here is, even though it was not a particularly strong or solid report, as some others have said, it's not bad enough for the Fed to change its mind. And I think what was interesting was, because of that sentiment here, we saw stocks sell off. The Dow hitting a low, was down 119 points at one point, because I think it was generally considered that the chance of a December rate hike now was that much greater, up to about a 70% chance if you look at the Fed funds futures. So the other belief is that that's already been baked in, to be honest with you, unless we had an absolutely shockingly bad report, which would have perhaps counterintuitively, to use your expression, would have been better news, because that would have maybe stopped the Fed from going ahead and raising 0.25% or thereabouts in December, but that's not the case.
Okay, so in other words, we're still looking at a pretty slow growth job market. Yeah. I want to get to the IPO market here, because they're talking about a $25 billion IPO for Snapchat. I got to tell you, look, that seems a little frothy to me here. I mean, it's a pretty cool company and all, but wow, Ashley.
I know, wow. And don't forget that the young CEO, 23-year-old Evan Spiegel, back in 2013, said to Facebook, "No, I'm not going to sell it to you for $3 billion. At the time, I remember we said, "You're all nuts." Well, he's 26 years old now, so he's that much wiser. $25 billion valuation if it's now called Snap. If it comes to the market, perhaps according to the Journal, next March, valuation around $25 billion. This year, the company expected to make maybe $350 million for the year, but the estimates for next year, according to some analysts for Snap, would be $1 billion. So maybe there is the value in there. So we'll have to wait and see. But it's 150 million daily users. People love this particular product, Trish.
Yeah, no, I get it. It's a cool product and all. The only thing I'd caution is that, these users can move to another platform should another one emerge. And, we've seen some of these tech companies come out before. Twitter's one that has really proven to be kind of a failure in the public markets. And even Facebook, which had a huge valuation when it came out, really suffered initially because people were having a hard time understanding that valuation. It has since recovered quite a bit. But, you got to really be able to sell the Wall Street community and the reporting community on that valuation. And that will be their challenge, I guess, in the months ahead. Ashley, good to see you. Thank you.
Same here, Trish.